Because the market is moving so fast these days, we could say something here at 12 o'clock that looks ridiculous at 2 o'clock. And, you know, one thing that I find interesting, there's been so much emphasis about big cap tech over and over again. Look at the Qs. They're down 20 basis points on the week based on where they're trading right this moment. So they've barely actually done anything this week. In the meanwhile, energy is just being liquidated, not sold. Liquidated. The XLE names are down 12% on the week, and it's only Thursday. The cruise lines and the cruises and the airlines are down pretty much almost all of them, more than 4% today. The Jets ETF for the airliners is down more than 10% on the week. So yeah, large cap tech had kind of a blow off top and has been cooling off, but really those stocks are stabilizing here. Now, there are some pockets of very unhealthy trading. What do I mean by that? Look at the way Zoom has been behaving. Stock went straight up vertical for days and days, and then just quickly loses 8%. That's scary stuff, and there are some pockets where that kind of unhealthy activity is going on. I guess if you're a day trader, it's not unhealthy. It's very healthy, and you're enjoying it. But for investors in those names, they are being whipped around like crazy. But I would just point out, those are the exceptions. So I think a lot of eyes are focused on Apple and on Microsoft as two stocks that if the overall market is going to stabilize, maybe those stabilize first. And based on what I told you with the Qs this week and even the equal weight Qs, we might be seeing the early signs of that. So I like Jim's instinct, this idea that, all right, you said you're going to buy a dip. You said you're going to buy a dip. Here it is. You got down 10% from the highs very quickly. Buy the dip. So I think that's the right way to be feeling right now.
Okay, that's a fair assessment, and we do bring this up when people say, yes, I'm waiting for the dip. This dip is great. This is exactly what we're waiting for and we need. And then you don't put money to work when you get the dip. Jim is actually putting money to work when he got the dip. John, you bought more Apple this week at 105. Apple has to be a key to the market, right? 103 seems to be a key level to watch according to traders. You're one of them, and you bought at 105.
Yeah, but Scott, and while that's all true, and like I say, I've been evening up my position in Apple, switching out of call spreads and back into the stock on this sell-off. But what I would also emphasize is that because of the outperformance of what Jim just bought, Microsoft, that has overtaken Apple now as my largest position. So that was pretty interesting to me that, you know, because just kind of watching the market, Scott, the way we do, I don't really watch on a tick-for-tick basis one stock against another. But in this case, the second largest holding I had, Microsoft, now has overtaken Apple as my largest position, not because of adds or subtracts in that space, but instead because Microsoft has done so much better over the short term. And maybe that outperformance continues, and I wouldn't be at all unhappy about it.
You think the worst is, I mean, it sounds like Josh and Jim are both saying that the worst may be over for this tech sell-off that we've seen. Do you think so, particularly when you talk about mega cap tech?
Well, Scott, I think I sent Prashant and the team a graph that showed that the peak when we were 70-30, we'll have a vaccine by the end of the year. We hit the all-time high for the S&P, and that was basically beginning of September, just after Apple and Tesla were splitting and so forth. And then it's kind of meandered down towards a 50-50 deal. Will we have a vaccine by year end? At least one or more vaccines by year end. And as we've done that, I was listening to David Kostin today over at Goldman Sachs, and he was saying you could plot that on a graph, how that has worked out to the downside once that went from a majority thinking we would have a vaccine to not having it. I think you put that together with the lack of stimulus, Scott, and if that same outlook prevailed, if we had no vaccine until 2021 and no stimulus at all, then I think the market could break these levels that it's hit. But it has bounced very strongly at exactly Tom Lee's levels, so I don't want to fade that. That's why I was comfortable adding to some Apple and, like I say, trading out of call spreads and into the stock, which I do when I think, you know, we get into that position.